Hey, this is Matt from InvestiQuant. Today is Monday, October 4, 2021. The markets have sold off this morning and into the afternoon session. They are kind of consolidating down near the lows of the session. So you can see this top left chart is the S&P. We gapped down after a quick test higher. We failed and we started trending lower. We have trendy activity here. And now we've kind of got like a bear flag type of formation. And this morning we looked at a pattern based upon yesterday, or the prior session, I should say, making a 50-day low. So that took place on Friday here in the S&P and rallied after that. And what I want to do this morning or this afternoon is kind of update that study when you're trading below the prior day close and that prior day made a 50-day low. So let me go ahead and set this up. We'll use all four instruments. The setup's going to be based upon entering the market long at 3 p.m. Eastern Time, exiting at 4:15 p.m. Eastern Time. Now, to describe this action, what I'm going to say is at the time of entry, which I've got set to 3 p.m., we are trading below the prior session close. That looks to be very likely at this point. So to do that, I'm going to go into the open or the post-open filters, intraday close versus daily levels, and I'm going to hit equals next to under prior close. That means the 3 p.m. price needs to be less than Friday's closing price. Next, I'm going to go to the price patterns library, which is just one down, and I'm going to say that the prior session made the lowest low of the past 50 days. So this is kind of a continuation-like pattern of weakness. So I'm going to go to active today to grab this one, and it's the very bottom option down here, day after lowest low of the past 50 days. It comes from our new lows category, and this, if you scroll down, you'll find it down here near the bottom. All right, lastly, I'm going to go into the indicators library, and I'm going to say that it yesterday, or Friday in this instance, closed above the 200-day simple moving average. That will just kind of isolate the days that we're not like huge bear market territory. We're still above a 200-day simple moving average. So I've added that to the test. Now I can click View Results. All right, here we go. These are the results based upon entering the market long at 3 p.m. Eastern Time, exiting at 4:15 p.m. Eastern Time, when at 3 o'clock you're trading below the prior session close. And the prior session made the lowest low of the past 50 days, but closed above a 200-day simple moving average. Historically, we've got 51 samples in the S&P, there's 20 in the NASDAQ, 26 in the Dow, 18 in the Russell. The win rates on them are all coming in weak, with the S&P coming in at 29% of these have closed above that 3 p.m. price. With the NASDAQ, it's 40%, the Dow, 31%, and the Russell, just 17%. So we don't have large sample sizes here, much like the study we ran this morning that was quite bearish. These also don't have many sample sizes, but they are all in agreement once again in the bearish fashion here. So looking at the average moves, it looks like they're pretty similar in size for the S&P. The NASDAQ and the Dow have larger average wins, and the Russell has a larger average loss. So a little bit mixed on the averaged move out of this pattern, but all four of them are in agreement that historically this pattern has continued lower more often than not in this scenario. So hopefully you found that helpful. Good luck the rest of the day. We'll see you next time.